Are they a customer under Regulation P? Regulation P, or Reg P, the privacy of consumer financial information, controls the sharing of a mortgage applicant's or borrower's sensitive personal information by banks, thrifts, mortgage loan originators, real estate settlement service providers, mortgage servicers, payday lenders, and private student loan lenders. Reg P requires any of the aforementioned entities that wish to share information about a consumer to allow a consumer to opt out of having their non-public information shared. However, certain privacy protections for applicants and borrowers vary depending on whether they are deemed a consumer or customer. Under Reg P, an entity's current customers are entitled to annual notices describing the entity's privacy policies. A consumer is any individual who applies for, obtains, or has obtained a personal use product or service from one of the entities controlled by Reg P in any time frame. In contrast, a customer is a special type of consumer with a continuing relationship with an entity controlled by Reg P. Some examples of continuing relationships with a consumer include if the consumer has a deposit or investment account with the entity, obtains a loan from the entity, has a loan which is serviced by the entity, has entered into agreement with the entity to arrange a mortgage loan, leases personal property from the entity, or obtains real estate settlement services from the entity. In the cases above, the consumer becomes a customer. Let's look at a couple quick scenarios. Consider an individual who applies to a lender for a mortgage. The individual's mortgage application is declined. However, they are still considered a consumer of that lender. They are not a customer, though, because their interaction with the lender does not continue beyond the declined application. Now consider a lender who takes a mortgage application from a borrower. The application is approved. After the mortgage closes, the lender sells the borrower's mortgage without retaining servicing rights to the mortgage. Here, once the mortgage is sold, the borrower is not a customer, but a consumer.